All right, so Trump's back in the White House, Act Two. You've probably heard a lot about it, and you're probably wondering what it means for, well, your money.
Yeah, definitely a lot of chatter out there.
Exactly. And we're going to try to cut through all that noise today.
Love it.
We're going to look at housing, stocks, taxes,
The whole shebang.
the whole 9 yards. And we've got some really interesting sources to dig into. We've got Reventure Consulting, ICE Mortgage Report, Kelvin Learns Investing, Streamline Financial.
Oh, and that NDTV profit piece, that was a really fascinating global perspective.
Yeah, definitely a lot to unpack.
Looking forward to it.
So let's jump right in. Let's start with the housing market. Reventure Consulting, they're predicting, well, kind of roller coaster ride.
Oh yeah, they didn't mince words, did they?
Not at all. And they make a really good point about affordability being stretched thin already.
Already a pressure point.
For sure. And they're saying Trump's policies could really make things even more volatile.
Yeah, that's a big concern. What really jumped out at me, though, was that stat about mortgage applications actually spiking after Trump won in 2016.
Yeah, that is surprising. You'd think people would be hitting the brakes, worried about higher interest rates.
Right, but it seems like the opposite happened. Maybe it was a confidence boost, who knows?
Yeah, or maybe just relief that the election was over.
Could be.
But then you've got the ICE mortgage report.
Yeah.
And they're highlighting this trend of early-stage delinquencies.
Yeah, that's a little worrisome. A lot of those homeowners are protected right now by government programs.
Right.
But if Trump rolls those back, we could be looking at a wave of foreclosures.
Okay, so let's pause there for a sec. For someone out there who's, maybe thinking about buying their first home, what would that actually mean for them?
Well, I mean, it could be good news in a way, right? More properties on the market, potentially lower prices.
Okay, yeah.
But the big question is it really a deal if the market keeps going down? You might snag a bargain, but then it could turn into a liability pretty quickly.
Oh, I see what you mean.
It's a gamble for sure.
So maybe not the best time to jump in head first.
Probably not unless you're really comfortable with risk.
And what about for people who already own their homes? What should they be thinking about with all this going on?
I think the key is to keep an eye on your local market.
Okay.
See what's happening in your neighborhood. Are foreclosures going up? What types of properties are being affected? The more information you have, the better decisions you can make.
Knowledge is power. That's what they always say.
Exactly.
Okay, so we've talked about housing. Let's move on to the stock market. Kelvin Learns Investing. They're suggesting that this Trump trade might be back, but with a bit of a twist this time.
Yeah, it's not a simple repeat of 2016. Things are different now.
Right. Valuations are higher. The global landscape's changed. A lot more uncertainty. And one of the big wild cards this time around, tariffs.
Oh yeah, Trump's a big fan of those.
Yeah,
But they can have a real mixed bag of effects.
for sure. Higher costs for consumers, for one thing.
Definitely. But could they also help some American industries? Kelvin Learns Investing, they don't really give a clear answer on that.
Yeah, it's tough to say for sure.
And then there's the national debt. I mean, it's already through the roof.
Yeah, no kidding. And Streamline Financial, they break down the potential impact of extending those Trump tax cuts, the Tax Cuts and Jobs Act.
Right. And it sounds pretty appealing at first glance. Lower individual tax rates, bigger standard deduction, maybe even no income tax on Social Security.
Yeah, sounds like a win-win.
But here's the thing, and Streamline Financial makes this really clear. These cuts could blow a massive hole in the Social Security Trust Fund.
Oh, okay. That's not good.
Not good at all. And then you've got the potential for higher inflation down the line. Short-term gain, long-term pain.
It's like trying to quench your thirst with salt water.
Exactly. It might feel good in the moment, but it's going to come back to bite you.
So, for the average investor out there, what's the takeaway? I mean, should we be heading for the hills?
I don't think it's time to panic, but it is time to be smart. Think long-term, diversify your investments, don't put all your eggs in one basket, and don't get spooked if the market takes a dip.
Solid advice. Ride out the storm.
Exactly. Weather the storm and stay focused on your goals.
Okay, so we've got a potentially shaky housing market, a stock market full of unknowns, and a tax policy that could be a ticking time bomb. Anything else we should be worried about?
Well, it's not all doom and gloom. Remember, we're talking about possibilities here. And for people who are informed and prepared, there are always opportunities. That's what this deep dive is all about.
I like that. Opportunities.
Exactly.
Okay, so let's zoom out a little bit and look at how Trump's policies might impact the global economy. NDTV Profit. They have a really interesting piece about the potential effects on India.
Yeah, that one was fascinating. It really highlights how interconnected we all are. What happens in the U.S. doesn't stay in the U.S.
Absolutely. And I think what's interesting is how These different policy areas, things like energy and immigration, they can all come together in unexpected ways.
Oh, absolutely. The Rich Dad channel, they make a really compelling case for how Trump's plans to reverse all those executive orders could unleash this wave of domestic energy production.
Yeah, okay, so more drilling, more pipelines, potentially lower gas prices.
Sounds good.
That does, on the surface. But the Rich Dad channel also brings up the potential environmental impact.
Right, we can't ignore that.
Definitely not. It's this constant balancing act between economic growth and protecting the environment. And Trump's policies are likely to tip the scales in a very particular direction.
Yeah, it's a tough one. So how do we make sense of all this? I mean, when it comes to our own finances, our own investments, what are the key takeaways?
Well, I think the first step is acknowledging that there are no easy answers. These are complex issues. But the more we understand the potential impacts, both the good and the bad, the better decisions we can make.
So basically, stay informed, do your homework. Exactly. And that's what we're going to do in the next part of our deep dive. We'll explore some specific strategies for navigating this uncertain terrain and making the most of whatever comes our way.
Sounds good to me. Let's keep digging.
Let's do it.
So before the break, we were talking about this kind of tug of war between energy and the environment.
Yeah, it's a tough one.
Yeah.
And it's definitely an area where Trump's approach is going to be, well, let's just say different.
Different. Yeah. The Rich Dad channel, they really highlight his plans to roll back like 100 executive orders. A lot of those dealing with environmental regulations.
Yeah, 100. That's a lot.
Yeah.
So basically, less regulation, more of a hands-off approach.
Sounds like it. And that could lead to, more domestic energy production, lower gas prices, all that.
Potentially, yeah.
Yeah.
But the Rich Dad channel, they also bring up the environmental costs. That's the flip side, right?
Right, exactly. It's like that saying, there's no such thing as a free lunch. We might see cheaper gas in the short term. Yeah. But what about climate change, the long-term environmental damage?
Yeah, that's the big question. And the Rich Dad channel, they don't really offer any solutions, but they lay out the trade-offs pretty clearly.
Yeah, it's a tough one. Okay, so let's switch gears a bit. Immigration. That's another area where Trump's policies could have a big impact, economically speaking.
Yeah, for sure. Kelvin Learns Investing, they do a good job of outlining the potential effects.
Okay, so what are we talking about here?
Well, on the one hand, reducing immigration, it could protect American jobs, maybe even boost wages.
Okay, yeah, that makes sense.
But on the other hand, you could also end up with labor shortages in key industries.
Like what kind of industries?
Agriculture, construction. Places that rely heavily on immigrant labor.
Oh, right.
And then there's this whole debate about the role of immigrants in innovation.
Yeah, that's a big one.
Some people argue that immigrants are essential, that they bring fresh ideas, new energy.
Right.
Others worry about them taking jobs from American workers. It's a complicated issue.
It really is. And Kelvin Learns Investing, they don't shy away from that complexity.
Nope. They lay out both sides of the argument pretty evenly.
So no easy answers there. It seems like a lot of Trump's policies, they're going to create winners and losers.
Yeah, that's a good way to put it. It's like this ripple effect. It touches everything.
Okay, so let's bring it back down to earth for a minute. If we're thinking about our own personal finances, what are the big takeaways here?
Well, I think the biggest one is diversification.
Right? Don't put all your eggs in one basket. We hear that a lot.
And for good reason. Spread your risk around. Different asset classes, different sectors, even different countries.
So kind of like a financial buffet, right?
Yeah.
A little bit of everything.
Exactly. Make sure you're getting all the nutrients. And don't be afraid to adjust your portfolio as things change. Do your research. Stay informed.
So flexibility is key. Don't get stuck in your ways.
Exactly. And be prepared for some volatility. I mean, Trump's policies, they're probably going to create a lot of uncertainty, both here in the U.S. and globally.
So buckle up. It might be a bumpy ride.
You got it. But remember, volatility can also create opportunities.
Okay, so diversification, flexibility, and brace yourself for some bumps in the road. What else?
The other big one is think long term.
Okay.
Don't get caught up in the day-to-day ups and downs of the market. Focus on your goals. Stay the course.
So don't panic sell if things take a dip.
Exactly. Stay calm. Ride it out.
And remember the power of compounding.
Oh yeah, that's a big one. Even small, consistent investments can really grow over time. especially if you're reinvesting your earnings.
Slow and steady wins the race, right?
Absolutely.
Yeah.
Now let's talk taxes for a minute. Streamline Financial, they gave us a lot to think about with those potential tax cut
Yeah,
extensions.
I'm still trying to wrap my head around it all.
It's a lot to process,
Yeah.
but the main takeaway, I think, is that it's not all sunshine and rainbows.
Right. I mean, lower taxes, that sounds great.
Oh yeah, who doesn't love a tax break?
Yeah.
But Streamline Financial, they point out some potential downsides, like it could drain the Social Security Trust Fund even faster, and it might lead to higher inflation down the road.
So short-term gain, long-term pain, like we were talking about earlier.
Exactly. It's like a sugar rush. Feels good at first, but then you crash hard.
Okay, so what's the takeaway for, the average person trying to plan for their taxes?
I think the biggest thing is be proactive. Don't wait till April to start thinking about your taxes.
Okay.
Talk to a financial advisor, do your research, make sure you're taking advantage of all the deductions and credits you can.
Don't be a tax ostrich, right? Bury your head in the sand and hope it all goes away.
Exactly.
Okay.
And remember, tax laws are always changing, so stay informed and be ready to adjust.
Got it. Okay, so we've talked about diversification, flexibility, volatility, thinking long-term, taxes. I feel like we're covering all the bases here.
We're getting there. But before we move on, I want to circle back to something Reventure Consulting brought up earlier. Privatizing Fannie Mae and Freddie Mac.
Oh yeah, that was an interesting one.
They suggested that Trump might actually go for that, and it could have a huge impact on the mortgage market.
Okay, remind me what those two do again.
So basically, they're the backbone of the secondary mortgage market.
The what now?
The secondary mortgage market. So when you get a mortgage, the lender often sells it to Fannie or Freddie.
Okay.
They bundle those mortgages together, and then they sell them to investors. It frees up the lender to make more loans, keeps the whole system moving.
So they're like the middlemen, making it easier for people to get mortgages.
Exactly. But the question is, should they be government-sponsored or should they be private companies? That's the whole privatization debate.
Right, and Reventure Consulting, they seem to think that Trump might push for privatization. What are the arguments there?
Well, the pro-privatization folks, they say it would make the market more competitive. Less government involvement, potentially lower costs for consumers. The idea is that the free market would do a better job.
Okay, and what about the other side?
Well, critics worry that it could actually make mortgages less accessible, especially for people who are already struggling to buy a home.
Okay, how so?
Well, without that government backing, lenders might be less willing to take on risk. That could mean higher interest rates, tougher lending standards.
So it's a trade-off then, efficiency versus accessibility.
Exactly. And it's one that policymakers are going to have to think long and hard about.
Hmm.
Reventure Consulting, they don't really take a side, but they do lay out the potential risks and benefits.
So another layer of complexity. And speaking of complexity, we've talked a lot about risks, but we haven't really mentioned the R word.
The R word, huh?
Recession. It's kind of been lurking in the background this whole time.
Yeah, I get it. With all this uncertainty, it's natural to wonder if a downturn is coming.
Right, exactly.
And Kelvin Learns Investing, they do touch on this. They point out that, yeah, Trump inherited a strong economy both times, but there are some warning signs out there.
Like what?
Well, those tariffs we talked about. And the national debt. That's a big one.
Huh?
And it's only going to get bigger if those tax cuts get extended.
Yeah, not good.
Not good at all. But Kelvin Learns Investing, they also say that, trying to predict a recession is basically impossible.
Okay, so what do we do?
The best we can do is be prepared.
So how do we do that? How do we recession-proof our finances?
A lot of the things we already talked about. Diversify your investments, have a solid emergency fund, and if you're thinking about making a big purchase, a house, a car, maybe wait and see how things play out.
Don't overextend yourself. Be prepared for a rainy day.
Exactly. And if you're in the stock market, remember, volatility is normal. Don't panic if things go down.
Stay the course.
Exactly.
Yeah.
Long-term thinking, that's the key.
Okay, so diversification, emergency fund, don't panic sell. Anything else?
Well, let's talk about taxes again. Streamline Financial, they gave us a lot to think about.
Yeah, I know. It's a lot.
It is. But one thing they really emphasize is, your individual tax situation, that's what matters most. What works for one person might not work for another.
So talk to a professional. Get some personalized advice.
Exactly. And don't be afraid to ask questions. The more you understand, the better decisions you can make.
Okay, so we've covered a lot of ground here. Housing, stocks, taxes, the global economy. I'm feeling a little overwhelmed, to be honest.
And a lot to take in.
Yeah.
And it's important to remember, this is just a snapshot, Things are constantly changing.
Right.
There are always going to be new challenges, new opportunities.
So if we had to boil it all down to one key takeaway, what would it be?
Be informed. Be proactive. Don't just react to the headlines.
Right.
Do your own research, understand how these policies could affect you, and then adjust your financial strategy accordingly.
So knowledge is power.
Exactly. The more you know, the better equipped you'll be to make smart decisions and build a secure financial future.
All right, so we've got a lot to think about.
We do.
Hmm.
But, you don't have to figure it all out on your own. There are resources out there to help you. Financial advisors, tax professionals.
And of course, reputable online sources.
Of course.
All right, well, we're going to take a quick break, and then we'll be back to wrap things up and leave you with some actionable insights. Okay, so we're back, and I feel like we just kind of scratched the surface of this whole Fannie Mae and Freddie Mac thing.
Yeah, there's definitely more to unpack there.
And I'm still a little fuzzy on what they actually do. Like, what's their role in all this?
Okay, so imagine you want to buy a house, right? You go to a lender, you get a mortgage. Well, Fannie and Freddie, they're the ones who often buy those mortgages from the lenders.
Okay.
They bundle them all together, turn them into these securities, and then sell them to investors.
Oh, I see. So they're kind of like the middlemen.
Yeah, exactly. And that frees up the lenders to, make more loans, keeps the whole mortgage market humming along.
Okay, that makes sense. But why is everyone talking about privatizing them? What's the big deal?
Well, some people think that the government shouldn't be involved in the mortgage market at all. They argue that private companies could do it more efficiently.
Oh, okay.
Less bureaucracy, more competition, potentially lower costs for borrowers. That's the idea, anyway.
So a more free market approach.
Exactly. But there are also some concerns about what privatization could mean.
Like what?
Well, critics worry that it could make it harder for some people to get mortgages, especially people who might not have perfect credit or a big down payment.
Oh, so it could actually make housing less affordable.
That's the fear. Without that government backing, lenders might be more hesitant to take risks. So you could see higher interest rates, stricter lending standards. It could really shake things up.
Yeah, I bet. Okay, so it sounds like there's a lot to consider with this whole Fannie and Freddie situation.
Yeah, it's one to watch for sure.
Speaking of things to watch, we've talked a lot about potential economic risks, tariffs, the national debt, all that. But there's this one big R word that we haven't really addressed yet.
Oh, you mean recession?
Yeah, recession. It's been kind of looming over this whole conversation.
It's on everyone's mind. And Kelvin Learns Investing, they do talk about it a little bit. They point out that Trump, he inherited a good economy both times.
Right.
But they also highlight some potential trouble spots. Those tariffs we discussed, for one. And the rising national debt. That could become a real drag on the economy.
Especially if those tax cuts stay in place.
Exactly. But Kelvin Learns Investing, they also make the point that trying to predict a recession is like, trying to predict the weather 6 months out.
Okay, so what can we do?
Best thing is to be prepared, make sure you're diversified, have a solid emergency fund, the basics.
Don't panic if things start to go south.
Exactly. And think long term. Don't make any rash decisions based on fear.
Right, write it out.
Exactly. Now, we've talked a lot about taxes in this deep dive, and I think it's worth circling back to that one more time. Streamline Financial, they really hammered home this point. Everyone's tax situation is different. What works for your neighbor might not work for you.
So talk to a professional. Get some tailored advice.
Exactly. Don't be afraid to ask questions. Make sure you're taking advantage of every deduction and credit you're entitled to.
Okay, so be informed, be proactive. Those are the big takeaways.
Absolutely. And, no matter what happens, remember that you're not alone. There are resources out there to help you.
Right. Financial advisors, tax professionals, and of course, all those great websites and podcasts.
Exactly.
So do your research, stay informed, and remember, knowledge is power.
Couldn't have said it better myself.
All right, well, that's it for this deep dive. Thanks for joining us, and we'll see you next time.